Okay, we're going to go ahead and get started this morning. We do have an 8:30 market report this morning. It is the unemployment claims. And we also have the Greek deficit decision today, whether they're going to come to an agreement over the payment by the Greeks and the terms or not. Now, they are expecting that decision today, although they do have until the 30th to make the payment. Okay. Now, that can cause market spikes. It can also cause a huge decrease in prices or a downtrend if they come out and say that, they're not going to reach an agreement. Okay. Now, what I want to do is actually start with the disclaimer. I'm not here to call your trades for you. I'm actually here to teach you how to use the indicators and how to trade on your own. Now, let me go down to the disclaimer. Um, the first thing I want to start out with is that this room is for informational and educational purposes only. Future stocks and currency trading has large potential rewards, but also a large potential risk. That means basically you can lose a lot of money if you do not know what you're doing. Okay. I do not endorse a trade along with Gail methodology. Instead, you need to know your risk parameters and you need to understand what the charts are telling you. Only then can you make an intelligent decision about entering or exiting a trade. Okay? Now, until June 30th, we do have two specials going on. One is the diamond package. Instead of paying $39.97, you only pay $29.97. Comes with all of the indicators for your platform, as well as the training videos, special webinars with me, and it also comes with an annual membership as well. We also have a seminar coming up in September, and right now until the 30th of June, it is on sale for $14.95. If you are an annual member, then you get that for half price. Okay? Now, let's minimize that. And these are my basic charts that I'm always looking at. It's the 1440, which is the equivalent of a daily chart, a 720, which is half a day, a 180, and a 45-minute chart. You can see on price, I have an indicator that has plus signs either above or below price, also has congestion dots, and the price bars are colored either red or blue. Sometimes you will see the white as you see here. The white price bar tells me I am close enough to the ATR or a congestion dot to take a trade. Since this is where I take every single trade that I enter is either at a congestion dot or at an ATR, that's extremely important to me. Down below that, you see that I have a volume indicator and it plots both buyers and sellers on each and every bar. It also shows us at the end of the bar whether the delta is positive or negative. What I'm looking for is divergence in this volume indicator with price that tells me whether to go long or to go short. Directly underneath that, we have the THD ADX indicator. The most important aspect about that indicator are these magenta dots. When we get a magenta dot and it looks like a pointed top, like a mountain top, then we know that price should retrace back to this ATR. You can see that that occurred here on the Dow, also occurred down here where we had the retracement as well. These are the things that I look for when I'm trading. Now we also have this for TradeStation and Multicharts in a radar screen format. So now I can take all of my instruments, throw them in the scanner window, and monitor all of the ADX values. I can monitor when I have a magenta peak, so I know that I would be counter trend trading. I can also measure divergence. For example, right now on the Swiss franc, you are getting long divergence. So that tells me we may go up on the Swiss franc. We also have the previous trend, the current trend. How many ticks away from the ATR are we? That makes a difference if you're entering at the ATR. For example, the S&P 500 on the 45-minute chart is currently 14 ticks away from the ATR. So if I was thinking about entering a trade, this is the one that is closest to an ATR right now. The next column tells us if we are in congestion. That means that the gray dots are being plotted on that particular time frame. So I can tell on gold, on the 720 and the 1440, we have both the gray dots and an ATR. On crude, we have congestion on the 180 and the 1440. Now, the 1440 crude chart has been in congestion for almost a month. So that's very substantial to know that, because you would want to trade that when it's either at the top of a congestion area or at the bottom of a congestion area. We also have two additional columns. Tells us if price is at a congestion dot or if price is at an ATR. Both of these columns have an input that you can identify within how many ticks do you want to be notified that price is close to a congestion dot or an ATR. This allows me to set alerts either through my phone or through a visual or audio alert, and it just identifies very quickly, hey, I'm at an ATR, I need to look at this chart. Does everybody understand that? Any questions so far? For those of you that do not understand divergence, I posted a picture today on the Swiss franc. It had three types of divergence. All three divergences I would trade. We had less buying volume. That's one type of divergence on the highs. Then we had the delta flip below zero. That's another type of divergence. And then we had a huge increase in volume with no reward. It was all three types of volume divergence within that one chart. And it's available on our blog for free. You just go and look at it. I'm going to go ahead and close this window because I have another one that I'm actually going to use. Give me just a moment. In this other one, I have already marked everything on the chart. That means that I already have all of my ATR in congestion lines plotted on the chart. So you can see that it's sort of a, well, let's start with red. Red is the 1440. That tells me either I have a congestion dot or an ATR in that area. The tan color here tells me that I have an ATR or a congestion dot from the 720. The green tells me I have a congestion dot or an ATR on the 180. So very easily I can identify where all of my areas of support and resistance are on any of these time frames. Does everybody understand that so far? Any questions on that? So right now on gold, we have a double area of support for for gold right around this area. If you want the dollar amount on that, it's around 1169, 1170 area. We have two areas that may actually support gold to go up. Right now, it looks like the sellers are decreasing. The one thing that worries me is that they tried to make it back to this previous low. They put a lot of volume into it. They did not get to that area. That typically tells me we should anticipate a magenta peak here. It is a type of divergence. Now, down on crude, we also have a double area. It's between 59.58 and 59.68. Now, right now, it does not look like this area is going to support price because sellers actually came in and they were able to make a new low on that volume. So I would anticipate a new low in crude today. If you're looking up at the Dow 45, you can see that we have above us a resistance area at 180179. We also have an area that may support price at 946 and at 877. Now, as I'm looking at this right now, you can see that the sellers are increasing to the downside. Typically, that means that they will break this ATR and it will go lower. Everybody understand that? It does need to break through this area in order to go lower. Now, typically what happens when you're trading support and resistance, it will break through that area and it will then come back and it will test that area to make sure that it's going to act as resistance. What do what does that look like? Okay? Here you see that we flipped. This is a red ATR, goes to blue, so it goes up and then it's coming back to test this area. It's testing right now to see if it will support price. Now, if it does offer support for price, the Dow could come up here to 18219. As it looks right now, and there's still 20 minutes left in this bar, okay, this delta could flip between that 20 minutes. But as it looks right now, it is not going to support price. Okay? Same thing down here on the ES. We went up to the congestion dot. We came back to test for support, and initially it did support it. It came up to the green line, which again, that is an ATR from a 180-minute chart. Usually they are very strong. Okay, so it comes up here. Buyers were not coming in very strong. What happens? It comes back to the ATR. Will this ATR continue to support price? The way it looks right now, no, because sellers are increasing. Could that change in the next 18 minutes? Of course it could, okay? But as it stands right now, it does not look like it will support price. If it does not, it will easily go down to 2096. Does everybody understand that? Now, over on the NASDAQ, we're seeing pretty much the same thing, okay? It has come down to an ATR or congestion dot that is on the daily. I know it is daily because that line is red, okay? So that initially offered support. They went up and tested the 45-44 area, and then it has come back down to test this area again. If this area does not hold, we will likely see 44.96. Okay? If it does hold and buyers come in on this low, then we could break through 45.44 again. And let's see if we don't have anything up above us, so we could see higher highs today on the NASDAQ, but only if this area acts as a support area. Now, over on the Swiss franc, you can see that we are getting in the magenta peak. We are expected to come back to the ATR, which is currently at 0735. Once it gets there, you would want to read the volume, because if buyers do not come in, it will come back down. It will probably break 0654. Okay? Now, if they do manage to go above this area, then they will break through again. They will come back to test. They have to make sure that they're going to have support at that area for us to see higher highs. Everybody understand that so far? Now, over on the British pound, I am expecting this to get to 57.44, 57.55 area today. I do think we may see some divergence once it gets there. If the divergence appears in those areas, then we will come back to this ATR. Now, the ATR does move with price, so as price is moving up, the ATR will move up as well. Over on the Euro 45-minute chart, you can see that it's into this area. There's an ATR on the 45-minute. There's an ATR on the 180. There's also an ATR on the 720. They may act as resistance. It may be giving us a clue as to what the Greeks are doing or how traders portray the Greek scenario working out. Right now, it's not looking too good. Okay. Now, it could come up and it could break this area. Generally, if it does break this area, it will be a strong break. This is where most traders make the mistake of entering on a breakout. That is your highest point of risk. What will happen, they will break through it. If they do, then they will come back and test it. That's the way support and resistance works on the market. Does everybody understand that? If they break through, they will come back to test to make sure that it's support. Now, if they break through and you're entering on a breakout, number one, your risk is very high. And when they come back to test it, more likely than not, you're going to be stopped out. That's why I don't enter on breakouts. Well, I'm glad you got it, viewer one. Any questions whatsoever? And right now it's summertime. So I'm more focused on trading the 45-minute chart just because markets are moving slower. When it comes October, you'll see me focus more on a lower time frame. Why? Because October, November, December is when the markets move the most as far as the gold, crude, Dow, S&P 500, the NASDAQ. The currencies, on the other hand, trade more in January, February, and March. Okay? October, November, December, that's the second highest month for the currencies. Okay? So this summer, great time to actually learn how to trade support and resistance. October, November, December, we get a lot of new traders in, and most new traders actually give up. They give up because the markets are moving faster. It's much harder to learn these concepts during October, November, December than summer. Summertime, it's slow. You've got time to focus on your charts. You've got time to focus on learning the concepts, okay? Then by October, you've pretty much got your concepts nailed. You've learned them, you've studied them, you've practiced them. Now you can take that and implement it on a faster time frame. It doesn't matter what time frame you're looking at, these indicators are going to work. Why? Because they're based on price, okay? They're not lagging, okay? If you've been to the website and watched the videos, then you can tell, hey, we can normally predict where price is going. Yesterday, we anticipated price to go down to 17,900 on the Dow or possibly 17,890. That's exactly where it went. Okay? We can anticipate it because we know where the support and where the resistance is. Does everybody understand that? Yeah, it's sort of like over here on the NASDAQ, okay? We had a magenta peak. Where is it coming? It's coming back to the ATR, okay? That's a huge benefit when you're trading and you know where price is going or where it should go. Now you have two things that you can answer. You know where price is going, and if it does not, you know that the market is not working as you anticipate. It's going to be harder to trade. You know, for those that were in the room yesterday, I told you I thought crude would come up here and test the ATR. And then what happened? Down it comes. This is typical behavior. Okay. We can see it on just about any market, any time frame. Now, a lot of you may wonder why I don't trade stocks. Basically, I don't like trading stocks. It's not that the indicators don't work, but I make more money trading the futures. And I don't have to worry about all of the business reports that comes out on a particular stock. So to me, it just makes it much easier. Less decisions. I don't have to scan as many instruments. Any questions this morning? Yeah, they are. They really pull price to them. And I update these every morning. Okay, now in NinjaTrader, and I don't have NinjaTrader set up because my computer got fried and I'm still working on setting up my new one. But in NinjaTrader, we actually plot the lines automatically. In Multicharts, I just draw the line on there and update them every day. And one of the most important concepts is learning where to read the volume, when you can use confirmed divergence versus potential divergence. And that, the support and resistance lines that you're seeing on my chart right now, the volume divergence, where to read the volume, whether it's confirmed, whether it's not confirmed, we call it potential. All of that will be taught at the seminar in September. And I think there's only 5 seats left on that now because I only do small groups. I don't do any kind of big group. You can't learn if you're stuck in a room with 200 people. You can hear information, but you do not learn that information. And I like for my traders to actually learn it. In any time frame, or you like it where you have a few ATRs together. The ones that are together, they create a stronger area of resistance or a stronger area of support. You know, the Swiss franc actually shows you a great example of that. I'm just going to extend it out for a moment. Do you see how you had an ATR, you had a 180 and a 720 all in this area? It's going to be tough to break. Normally, when they break through an area like this, the price bar is going to turn magenta, or it's going to be a wide bar, okay? Because it's going to take a lot to push through that area. Does that answer your question, viewer one? It's sort of like on the euro right now. You know, you've got three areas there. It's not saying that it can't break it. It's just going to take a very powerful move to break through. You know, on gold, again, I would be waiting for this magenta peak. Now, if it was during October, okay, I would go down to a 3 minute and trade that, okay? Would I do that as slow as the market has been this week? No, I would not. And it's just because it's slow, okay? I would rather stick to the 45-minute chart. Now, the downside to that is you're pretty much going to be with your trade for the biggest part of the day, okay? So, you know, either if you're trading futures, then you would have to be at your computer most of the day. If you're trading binaries, you could enter it in the morning and, you know, not worry about it because you do lock in your risk on the binaries. And a lot of times when I'm trading binaries, it's because I can't be at the computer all day. So the second best thing to that is trading a binary. And we do have really great moves in the summer. On the Euro 3 minute chart. Give me just a minute and I'll pull it up. Or maybe I won't. There we go. 2, 6. Give me just a minute. It's running slow this morning. Not what I wanted to do. So here you see that prices made a high. The delta flipped below zero. And it was also a decrease in buying. That's one divergence. There's a divergence here to the upside, telling you you're probably going to go back to this ATR. You had divergence here. Sellers did not step in. They checked for buyers again. Again, you have divergence. And on this bar, sellers started stepping in. Let's see. Your volume on the crude looks a lot different than mine on the last completed 45-minute bar. I am set to trade volume. That bar on yours is very deep and pronounced, and delta below zero. Mine is not. Just trying to figure out what the difference is. Any thoughts? It depends on whether you have been live the entire time and whether you have the same future session that I did. I've set my own future sessions. And I presume that you're talking about this bar. Now, I'm collecting my data through the quote manager as well, viewer 10, so that sometimes will make a difference as well because I do the bid, ask, and the tick. Does that answer your question? Yeah, I created, and I've got a video online that shows you how to create your own sessions. And I did create my own sessions, and then I make sure that I'm set to the future session. Only because I did not like having different sessions. In some of the sessions were not on target as far as the latest openings and closings, so I just created my own, and that prevents it altogether. And again, over on the British pound, you can see exactly what I was telling you earlier. You see how this is a red ATR? They flipped it to blue. It goes to the congestion dot, comes back to test for support. That's what you want to see anytime it flips the ATR. And so there's a lot of traders that their entire methodology is, okay, if it takes out this high, I'll enter. So they're entering on this bar. This is when they're going to come back and they're going to potentially test the ATR. Why not wait until they do that? Wouldn't you get a lower risk trade? When you can identify a pattern that happens over and over and over again, then you can trade that pattern. And that's what these indicators do. They allow you to identify the pattern, read the volume, and then be able to go into the market. Do we have any other questions this morning? Yes, it did. you may still get a reversal back to this ATR, okay? And that is because you're hitting an ATR this on the 180, okay? So you had strong buying coming in. I still think we'll go above these two areas before it's likely to retrace. That would be my anticipation. Normally, it will break through that area, and then it's going to come back and test the ATR again. But normally, that will happen on a magenta peak. And as you can see right now, there's no magenta bars, okay? That tells me I cannot have a magenta peak because I don't have magenta bars. We had nice, strong buying volume there. Normally, you will get divergence, okay? There's no divergence there right now. That is absolutely correct, viewer one. When I first started trading years ago, everybody said, don't take the first breakout, take the second breakout. And then it started, well, don't take the second breakout, take the third breakout, okay? And it was just like, are you guessing which breakout to take? I don't take breakouts. Right now, if you look at gold, and I'll draw it on there for you. Okay, do you see how they're coming back to this line? And you're still getting that volume divergence. This is where I'm expecting that magenta peak to come in. And normally this will occur. The divergence occurs one bar preceding the magenta peak coming in. If you notice over here, you have the divergence. Then the magenta peak came in. Here you have the divergence. Then the magenta peak comes in. And that is absolutely correct because I was trading crude yesterday. And I was trading it on NinjaTrader. So I know exactly what you're talking about. And they did. They went straight up to that ATR yesterday on NinjaTrader. And the moment they hit that ATR, you saw sellers. Bam, 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 bam. It was all she wrote. And you see right now on the, oops, didn't do that very well. Over on the NASDAQ, do you see how I can't draw this morning evidently. Do you see how they came in on that low? That normally tells me they're going to go back and they're going to test this area right here at 45.44. Why? Because when they made that low right there, what happened? Buyers stepped in. They are. It's excellent examples of, you come into an ATR or a congestion dot level and you see buyers or sellers stepping in at that level, it's pretty much all she wrote most of the time. And by the time others are thinking about getting in, you're already in. That's the beauty of it. But that's the beauty in volume itself. Then all you have to do is add risk to reward ratios, and you pretty much have the odds in your favor when you do that. Do we have any other questions this morning? No, the green lines are the 180-minute. Yes, Keith, I do. 180 is green. The red lines are the 1440s, and the tan lines are the 720. The congestion zones on NT only do the dots, okay? Mine are from both the dots, which are the congestion dots, and the ATRs. I do both on my charts. Let's see. Let me go and show you. If you go to the blog, that is actually the best resource. Now, I do have some videos that are limited to people that have purchased the tools. Okay. You can see we have 4 new clients. But then if you actually go to trading videos, there it's a lot of videos there. Okay. And well, I thought it was there. I'll have to go in and fix that. That's weird. There's another way to get to it though, don't worry. Trade videos, including the live trading room. Which book, viewer one? The binary or the volume? The one I did this morning was absolutely the picture. It tells the whole story because it gives you both types of divergence. You've got the below zero, you've got the increase in the volume, and then you've got the decrease in the volume. We also have, just a ton of videos on here, just depending on, what you're looking to see. And then if you go back to the actual Trader's Help Desk, then we also have, let me get back to it. It's a presentation there that actually walks you through the indicators as well. One of the most important concepts is I only enter at an ATR or a congestion dot. And you will not believe how much simpler trading is in itself just because you do that. But now with the market analyzer and the scanner, I mean, you can get alerts through email, through your phone, visual, audio, just any way you want it to let you know, hey, you need to go look at your chart because price is at an ATR. So basically, your remaining decisions, you have 2 remaining decisions once you know that. Number one is, do you have a risk to reward that is favored to your trading? That means a 1 to 2 minimum risk to reward ratio. Is volume diverging? It's really made trading a lot simpler. Now, that doesn't mean you don't have to learn. You do. But there is absolutely, positively no reason why you cannot learn, because I put a lot of time and a lot of effort into videos for you to learn with, and also into webinars. I mean, I think last month we did a webinar and I taught volume, and I just didn't feel people were proficient in volume, so we ended up doing another 2 sessions off of it. It's I put a lot of time and energy into my clients to make sure that they do learn it. That is absolutely correct. But some people do require a seminar. And, some people, I'm working with a guy right now that he really needs a one-on-one. Um, some people need the seminar environment. So not only do they get, personal time with me, but they also get to, talk with other traders in the room. People learn differently. That's the bottom line. I'm one that I learn from videos. I will play the video and play the video and play the video until I get it. But regardless of what type of trader you are, I have it covered. Yep. Anybody else have any other questions? The diamond package and the seminar special will be available until June 30th. It will not be available after June 30th. It is the Traders Expo special that I ran, and it does end on June 30th. Any other questions this morning? Because if not, the seminar is in Greensboro, North Carolina. I think it's September 28th and 29th. I think. We'll find out, won't we? September 27th and 28th. See, it's a good thing I clicked on that. I tend to trade more binaries during the summer just because it's so slow, and I don't like sitting at the computer until 5 o'clock watching a trade, or 4 o'clock. In the summertime, I like doing other things, so I'm not just sitting at the computer. Well, thank you for joining us. I do hope everybody has a wonderful trading day. I'm going to go and find some trades myself. If you have any questions, I'm always available via email. I hope everyone has a wonderful day, and I will see you next week, same time, same place.